Welcome. This is your Option Monster Volatility Sonar Report. From the floor of the SIBO, I'm Jamie Tyrrell of Group 1 Trading. Well, we have our December VIX print today. The December VIX settled 51.29. That's 51.29 on the opening of the SPX this morning. We've talked about how the print works in the past, but I figured I'd just go over it a little bit. Right over to my left here is the S&P 500 pit. So, in looking at the December settlement, you look towards the next month out, those volatility levels that people are running in the S&P 500. So for December, we looked at the January options for the settlement price. Now, every out-of-the-money options along the curve counts in the settlement. The downside puts count slightly more than the upside calls, but every strike matters. And they take the opening print on each line. So if someone wants to buy a particular option for 40 cents and there's a seller at 40 cents, they go up 40 cents, and that 40-cent value goes into the calculation. Now there's hundreds of strikes, they all factor in, and they took the volatility levels on the open on all of those, and they came out to 51.29. Now 120,000 options traded on the S&P 500 open. That's pretty normal for a VIX settlement. We've actually been seeing more than that recently. There's a lot of people who find a lot of liquidity right then, and just a lot of people want to participate in the electronic VIX settlement. So 51.29, we were trading about 52 in the cash yesterday before the close. Then overnight, the S&P 500 was down a little bit. We had Morgan Stanley come out with earnings. There were a number of news stories, but nothing really to increase the level of fear that was in the marketplace. So the S&P down small. VIX was also down small, coming off a day where we had a big rate cut and then no extremely negative news the night after. So in looking at yesterday's trading, we had a lot of premium sellers. A lot of people selling the 60 calls. They were selling those for a quarter. People selling the 65s right on the open for a dime and then a nickel. None of those finished in the money, so the sellers collected their premium on those. Towards the end of the day, the 55s traded a whole bunch. They were trading 20, 25 up to 50 between 3 and 315. All of those expired worthless. An interesting thing that we're seeing is more binary activity. Now the binaries are the yes and no options. For a lot of retail investors who aren't in the VIX right now, the binary is a pretty simple way that a lot of retail people are getting involved with the VIX. The maximum value of each contract's $1. If that contract finishes over the strike price, you get the $1. If it's under, you get nothing. So if you bought a 5 lot of the D60 calls, you would be, they were trading for 5 cents, you would be risking $25. And then if those finished in the money, you would get $2,500. So that's what we saw a lot of. A lot of people taking cheap shots at the upside calls and the binaries. The D60s traded, the D55s traded, also the D50 puts, those also traded. So we did have over $3,000 contracts in binary activity yesterday, and we're seeing more and more binary activity usually on the day of expiration and the days leading up to it, not so much earlier in the month. They're more of a late term play. In today's trading, it's been pretty quiet in the VIX. As I said, 120,000 in the S&P 500 for the VIX settlement, but very little in the actual VIX pit. We've traded about 10,000 contracts. It's mostly been in January, mostly premium sellers. We've had sellers of the 45 puts, the 47 puts, and a few upside calls. But overall, pretty quiet day. That's what we got going on here. 51.29, that's the print. Check back for more.
Any of you boys see an aircraft carrier around here?